Good afternoon, everybody. So we're going to talk about the investor's point of view of the fintech world of 2019. I guess we'll start with, I'm guessing last year, when there were a lot of people, what was the big thing? Was it cryptocurrency? Not so much this year, maybe? Not so much. What is it, guys, that we're going to look back on from 2019 and people say, that was the cryptocurrency of 2019? They were the sort of thing that maybe people spent a little too much money on.
It's a tough question to answer because I think whatever we say is going to be held up against us in the future.
Yeah,
and
predictions.
We'll probably end up investing in that sector. Possibly lending. I think we look at lending today and there's so much growth in the lending space and so many new approaches in lending. At the same time, the economy, particularly in my country, is looking fairly precarious. And what that's going to do to lending companies over the next year is going to be interesting to see.
So there's just too much money going into lending? Is that, what do you think, Harry? Is it sort of...
I think the credit cycle will have to turn at some point. And the interesting bit, actually, from my perspective, because with a lot of these startup companies in the lending space, investors always ask, okay, how is this new business going to behave when the credit cycle turns? And this thing always hangs above these companies' heads because you can't say anything about it because you just haven't been in that cycle yet. So in a way, it's kind of good that the cycle is going to turn because then finally people can say, this is how my business behaves when the credit cycle is turned the other way.
Yeah, yesterday somebody, I think was on a presentation here, said that they have made hundreds of millions of dollars of loans and they've had no defaults. I was like, that's interesting. I mean, you know, that doesn't happen very often. Now that may mean because their formula is amazing and they've got the right algorithm, whatever it is, and the perfect data. But I think I've seen that story before.
I mean, what we should never forget on lending is, I think the real revolution about alternative lending is it is not securitized. There's no collateral. At the end of the day, typically, I mean, there are models with collaterals, but most of them are without collateral. That is often forgotten, right? The real disruption is that these guys are using data to actually manage portfolios in a very reasonable way. Default rates are typically quite okay, depending on the market. The banks still use collateral in a big way, right? I mean, it's obviously easy to give a loan to an SME if the owner, gives you access to his building, right? Or hands over your building, right? Anybody can do that, right? So let's not forget that aspect, right?
Yeah, I mean, I would agree. I think lending is definitely one area, potentially. The other thing I would say is, in a benign environment, it's very hard to make any judgment on default rates, in my view. Who knows what algorithm is working? Kind of reminds me a little bit of the old Warren Buffett truism, which is, you only know who's swimming naked when the tide goes out. So you can have the worst algorithm in the world be writing loans right now to super prime, borrowers, and just not be found out.
Right.
So it's hard to know in this environment.
Okay, let's talk about the good stuff.
Yeah.
What is, okay, that's we've dealt with like what will be the Bitcoin or whatever you want to call it of 2019. What are you guys excited about? I mean, what areas are you spending some of the most of your time, engagement, and money?
Let me just add one thing. We actually never did crypto, and end of last year we actually did our first crypto. So we were a bit counter on this. It's a asset management play on crypto. You can buy crypto ETFs. I just think it's an alternative asset class which makes perfect sense for some of our LPs. But what I really like, I mean, we like SME. I don't think anything is really new in 2019 for me. Like we've believed in SME for a very long time. Anything SME, from tax, accounting, working capital, pension. I think pension is going to be huge. Private pension is closing that pension gap, especially in Europe. That's going to be very, very big, and I think the distribution through SMEs of pension is going to be really.
How do you invest in a startup that helps close the gap between 20-year, 30-year promises and assets that are nowhere near reaching those?
Well, there is such an information asymmetry between the average guy on the street about what it takes to close the pension gap. I mean, you really have to take these people by the hand, and there's obviously with a mobile phone and with the data that is available through the employer or through the payroll systems, there's so much value you can add in sort of in a very simple way, demonstrating the gap and just helping people save. There's multiple startups we've seen yesterday all over the place trying to help people in a funny, engaging way to start saving millennials. So I think that there is ways to do this well. Yeah.
Yeah. What gets you excited?
Yes, so SME is one of the areas that we as well are focused on, because the reality is that small businesses have been completely underserved in many, many products, primarily because they're just very hard to, or very expensive to serve, and very hard to reach. And with all the developments right now, that those barriers have gone down. So we've placed bets in SME financing with Funding Circle. We've placed bets in SME kind of expense management with Soldo. We've done SME travel management with Lola. So a whole series of SME investments. We have to say, of course, with you guys being invested in N26, and you guys being invested in Revolut, we and Monzo, that the whole neobank emergence is in the cycle that we've all invested in, and hope that of course will continue to go further. And besides software, we've been big investors in. Besides fintech, we've been big investors in software, but that's off the mark right now here.
What about you, Rob?
Yeah, so I think the neobanks, the Revolut, Monzo, N26 will continue their massive growth over the course of the year. The area I've been looking at a lot is insurance. I remain very bullish on insurance. I see this enormous industry that should be run through AI, through data, through technology, and is still to a large extent run on paper, with many layers, many intermediaries, many brokers. And I look at that big picture and I think a lot has to change in that industry. And we haven't seen enough yet. We've made some early bets in companies like Zego, but it's still very early days. So I think there's a lot more to come in 2019 in the insurance area.
What about you, John?
Yeah, I think that so we are a later stage investor than the three other guys up here, and so I think we're typically looking at more developed businesses. The new banks, in particular, each of you guys have made a bet, and we've been looking on a little bit with envy at just the valuations that these companies have been reaching, but also kind of scratching our heads trying to understand where we can get involved. Because for TCV, our kind of sweet spot is classically the last capital that gets in before a public offering or something like that, and so we kind of have to get it right in terms of what the winner is or the category leader. So, but that is definitely an area that I think is really fascinating. And all three of these companies, as you mentioned, Rob, are growing really fast. The other area that we think continues to have a lot of interest for us is actually simple payments. I think payments has seen a lot of, there's been a lot of innovation in that category over the years, and yet you still see across Europe in particular, kind of incumbent legacy bank spin-outs as the dominant player in a certain country. And so for the area we play, I think we're starting to see a lot of these companies. I mean, we saw Adyen as being a massive success. I think there's others in and around the payment ecosystem that are making it really simple for merchants, focusing on the SME side, for example, as well, which has not been the area where like a WorldPay or a Nets or an Adyen would have focused. So I think that's a pretty interesting area to look for opportunities.
I think on the payment side, it's the move into open banking, PSD2, enabling direct bank-to-bank account payments. And then you also still have blockchain. So you have two alternative payment rails outside of the big credit card networks. And see whether one of those really starts coming through over the next couple of years will be really interesting.
So one of the things we talk, will there ever be like an Airbnb or Uber of financial services? I mean, look at some of these, there are lots of unicorns, and you've got your neobanks and whatnot. But is anyone going to be in there able to kind of really get the sort of size and scale that we've seen? Okay, it's not a perfect example. Uber's facing regulatory hurdles, and certainly Airbnb, but these are whatever, $60, $70 billion companies by private market valuations. I mean, is regulation just the friend of the incumbent here?
Well, you talked about the online point of sale. I think the banks completely miss the online point of sale, and they continue to miss it, and that's where a lot of the innovation happens. That's where data can be reaped to the benefit of the customers. And if you look at some of the players like WorldPay, like Wirecard, like Adyen, these are global players, and within the next 5 years they will be truly global. And
when you say the point of sale, these are the guys you give your card
online point of sale. I'm not talking the offline, like the
Right.
hardware in the
Right.
in the shops. But of course, these guys are also now coming into the shops because the customer wants to have exactly the same user experience as on an iPad in a shop, right? So those guys are also going to take over a lot of that infrastructure. But I mean, I would say, look at their market caps, right? We're talking 20 to 25 billion market caps already in that segment. Admittedly, those are companies that are a lot older. They're probably between 10 and 15 years old. But I mean, that's the kind of value you can get. And we haven't even spoken about China. China is a whole different animal.
We'll get
of
to
course.
China in a second. I don't know. What do you think? You're going to see an Uber of finance?
I think maybe not Uber, but you made the comparison with Spotify. So for light financial services, is it possible to have a Spotify of finance? And I think the answer is probably yes, probably.
I think something we're seeing is the regulation led to most fintech innovation being one country focused in the past, with the exception of payments, where the PSPs were very global and someone like Adyen. But in every other area, you were building national champions. And now we're seeing the likes of Revolut, Prodigy Finance, that are across lots and lots of countries very early on, and really growing global businesses, and regulators being more flexible around that, and new forms of regulation. And that's really exciting for us as a VCs. If you can start building successful fintech businesses across 20 countries, 100 countries, then they can be truly massive.
I mean, still, I mean, aren't the local regulators, you say they're more flexible, but at the end of the day, you can even hear it now, they like the idea of European bank consolidation, largely because it makes their jobs easier. Why you guys must be making it hellish for the regulators?
I mean, we as fintech investors, I think the regulator has to be your friend. I mean, it has to be your friend, because otherwise, I mean, they can shut down your business, right? And they don't care how big it is. So we actually engage with them, our founders engage with them. And I think what has changed is there is much more flexibility, at least within Europe, about accepting other models. I think, but also we have to go to the regulator, founders of Europe, and they have to talk to them. These are people, actually. You have to talk to them, you have to explain how it works. Very often there's a lack of knowledge on the technical side. You have to explain it to them, not in an arrogant way, and make them understand, actually, this is to the benefit of the customer, the SME. They get their loan a lot faster, fraud goes down, it's much more convenient. So I think regulators, especially in the UK, but also other parts of the world, they've understood that actually these young people are working in their favor. And I think that dialogue is really important. And of course, I mean, and if you look at the details, there's so many hurdles still in Europe today. Like I was talking to the guys from N26 in France. We have different IBAN numbers between France and Germany, and that creates enormous problems for your direct debits and whatnot. So you have to get a local IBAN, you have to go through this whole process. So all these things still exist, but the founders we invest in, they don't care. They're just gonna go against that, and they're gonna find some hack as right, to overcome it.
Yeah. What were you going to say, Harry, about that?
Well, so that I think we are particularly lucky in the UK to have a regulator who is very forward-thinking, and so maybe we're extrapolating some of our experiences based on that experience, but yeah.
What about, but yeah, that's the problem. I mean, you've got to go, to your point, Rob, I mean, if you want to have this, it's great, this idea that you can have a sort of Europe-wide or, region-wide, but you're still got to deal with like the Italian banking regulator in Rome who's like worried about this and probably has lots of pressures from the incumbent banks there and then the ones in Spain. And I mean, ultimately, I'm not yet convinced that the regulated massive banks in Europe won't be able to crush a lot of these guys or just put them out of business or acquire them before they blossom into that Uber size.
So I think there's two parts to that. One is levels of friction, and I think there's always going to be some friction in going between countries, as there is for Airbnb, as there is for Uber. But that friction has come down a lot for expanding across Europe, which wasn't true 10 years ago, 15 years ago, but now it is much easier through passporting to expand across Europe, and that is a great advantage for European startups. Whereas you compare it to trying to go in the US, and then you're at state legislation, so you need to go through 50 states, state by state. So that's a particular advantage I think European fintech companies have. At the same time, there's always going to be some friction. But that's what good entrepreneurs, good founders do. They force their way through this, and they never take no for an answer, and they keep pushing. Whether banks will be able to crush
move fast,
startups,
break things.
Yeah. Well, no, you can't do that to the same extent in financial services.
Banking is pretty tough.
Exactly.
And it ain't even working in social media.
So I think you can't break things. Maybe a small amount on the edges, but you have to be careful on how you do it. I think, the challenge is definitely from the incumbent players. They have massive balance sheets. They have existing operations. They have shown some ability to fast follow on usability, say mobile banking apps in the UK. But at the same time, they have a huge legacy. They have classic innovator's dilemma. It's hard for them to move fast. And there's lots of gaps. As you say, SME is a huge gap. It's just not seen. Within a big bank, they don't care about SMEs. It's not interesting. It's a crap market. So just avoid it. And that creates a big opportunity.
Right, so the areas where the banks have sort of left people behind.
No, but I can tell you there's a lot of cooperation going on between fintechs and banks. I talk to them all the time. We have as co-investors ING, Santander, BBVA. They are very humble. They don't look down at these fintechs at all. There's a really good dialogue actually going on between them.
They can't wait to buy them.
There's a lot of respect, and let's see.
Which raises a question about exits, and we can get into private-public capitalism in a way. But for a lot of these companies, how do these companies? How do you exit them as venture capitalists? What's the way for you to create liquidity for your limited partners?
So I think to John's point earlier, I think you look at the banks and the people who actually have money, which is a fairly small group at the moment because the banks have had a pretty tough 10 years and there's huge regulatory oversight. So there's a small group of people who have money, and they also struggle with valuations. And I think they find it hard to value a company that's growing 3x year on year that is not yet profitable. And we haven't yet seen them really adjust to that. So haven't seen any big M&A. We've seen, so there's been much more IPO. It's been Adyen IPO, it's a Funding Circle IPO. And I think that's where we have to sort of keep our focus as investors is, can this company reach a scale where it can IPO one day at a good valuation?
Well, what about the private-public market issue? I know, Harry, you've got some thoughts on this, but nowadays it seems companies like Uber and Airbnb are good examples, can go on seemingly forever with 30, 60, $80 billion, I won't call them market caps, but somebody's marked them at those valuations. We'll see what the actual efficient market would mark them at. But, could that just go on forever? Till they're just self-funding? What are we done with the stock? Our stock market's a kind of,
So to me, that's the interesting question. So it used to be when the private markets and the public markets are completely decoupled, the question comes up, who is right? Well, obviously, if every company would have to go public at some point, then by definition, the public markets will be right because they have the last word, right? But now, maybe that's not the case anymore.
Well, when you say right, what do you mean? Like what? Right about valuation?
Right about valuation.
Right. Okay.
So if a company were to be valued at 100 in the private markets, but everybody has to go public and they would be valued at 60 or 70, then 60 and 70 will be the right number ultimately because everybody has to go through the gate. But if you no longer have to go through the I have to go public gate, then the last word doesn't count necessarily anymore. And then you have to ask yourself, well, are the guys in the public markets the smarter ones valuing these companies properly or the people in the public markets? And by now, a very good chunk of technology financings take place in the private markets. And arguably the universe of practitioners, people who pay a lot of attention to things and study these markets, probably is larger in the private markets than in the public ones. So the question, again, you can pose yourself, who is right here?
I don't know.
Maybe
who is right?
just to respond to that. So I think it's a very good question. I would argue that the private markets, maybe your horizon's not 5 years, maybe it's 20 years, you've got every green capital or something, but ultimately it will have to be vindicated by the public market, either by an IPO or a public market company that acquires you, in which case the public market will determine whether that was a good acquisition for the price it paid for you or not. People could argue, oh, well, there's like sovereign funds or other guys will take stakes. Up to a point, I think at some point they'll still need validation from a third-party efficient source, to use Rob's terminology, of whether that valuation makes sense. So I see it as, I think it's a very good question. I think it's not clear who's right in the short term, but I think in the long term, the public market obviously is the authority. And yeah, it'll be interesting to see how that plays out. But I think what's allowing the private markets today to continue to be decoupled, to use your word, from the public markets, surely it's just the fact that we have a lot of dry powder.
Right.
Without that, they can't really be decoupled.
And that may be a function of lots of things, including 10 years of ultra-low interest rates.
That's what it is.
All those kinds of things,
Quantitative
which
easing.
may one day end, but they also may not too.
Yeah.
But I mean, it's interesting because you look at some of the private company valuations, whether I think it might have been Uber or WeWork, where you basically had a new funding round at the same time that the new funder, I think it was Softbank, was buying existing stock at like a 30% discount. So somewhere in there lies the truth. I'm not sure which one it is.
Yeah, I think that the challenge there, Rob, is the headlines that you're talking about that captures the media's attention doesn't take into account and rightly so, because most people don't really care or want to understand, but there's a nuance around the structure of these investments. So that's, I think,
yeah, no, I mean, they have preferred and all that.
Yeah.
But also, that in theory is one of the reasons why the stock market is a slightly greater leveler, right? Because it's more democratic in theory. The efficient market hypothesis teaches us that all information being equal, it should come to the right price. But who knows? So why are you guys in Europe? I mean, all the action seems to be in the United States, in China, in technology and venture capital. I mean, I know a lot of you are also, you work for global funds, and a couple of you. But I mean, literally, you look around and there are just no major tech companies in Europe. And I know that's a question on the minds of lots of policymakers in Europe. But as guys who hunt for great ideas and value, why are you so bullish on Europe?
I would say that you're not right in terms of that there aren't many big tech companies.
Okay, you said Spotify.
Well, Spotify, 20 to 30 billion. Accel, 20 billion. Zalando, 6, 7. Supercell was sold for 10 billion. So it is not where the United States is right now, but it's a massive difference with how it was like 10 years ago. So
that's fair.
So you gotta see the trend, and I think the trend is very strong and up.
But why hasn't Europe gotten? Why? I mean, okay, we've got a couple of 20s and 30s and 10s. Why is there no, Tencent, Alibaba,
Can I take a crack at that? I agree with Harry. I think the trend is definitely improving. I think in the past, a lot of European companies would, especially when you're trying to go horizontal, to expand across borders was just much more challenging. So even with better technology or a better solution product, you're just going to get beaten by a US guy. You can go coast to coast real quick. You're in the Netherlands, for example, and you get acquired. A classic example of that would be Booking.com. Right, Booking.com's market cap is close to 100 billion. It's a Dutch company, ultimately.
And that was like Priceline or someone bought it.
Priceline acquired it. It's now been renamed, I think, Booking.com again, right? Just to reflect the fact that the booking is where the value is and where that business comes from.
Priceline is no longer Priceline?
My understanding is it trades at
that's
Booking.
interesting. Interesting.
Yeah. So I do think it's, and then if you look at the ones that are just, the massive companies, the Apples, the Netflixes, the Googles, they are, 10 plus years old. So it'll be interesting to see how it goes from here, because I think up to this point, there was kind of a natural exit for European entrepreneurs to a U.S. company. I think that is changing rapidly in my view. If you just look at even the companies you've mentioned just now, I mean, Spotify probably could have been acquired for, a few billion. I know Adyen had multiple offers. Right. The three companies you guys mentioned, the Revoluts, the Monzos, the N26s, if they're to kind of fulfill their potential, it's going to be multi-billions.
Yeah, let's not forget there's also great tech companies that never had a VC investment. So we're not going to claim there's a great tech. European tech company always has VC funding, like Wirecard is a pretty good example. You asked about liquidity, right? We're a very early stage investor. Let's not forget, we always talk about the famous big successful cases. We have over 100 investments in portfolio, and frankly, 10 to 20% have that potential to IPO max. Everyone else, we're super happy exiting at 40 to 80 million, and the banks and the larger tech companies and all these systems integrators, all these big old school tech companies are great buyers, and they buy a lot actually. If you look at UK capital markets, there's a lot of M&A going on, a lot of banks picking up AI-driven companies, for instance, or technology companies, below 100 million exits. Let's not forget that. That's also a great way to create liquidity. And the other thing is, I totally agree with my colleagues. I mean, look at all the US and Chinese and Asian capital pouring into Europe, especially the last few years. We've had a lot. I mean, Tencent invested big time in N26. I mean, these guys are coming. Softbank is coming. I see a great change in the Valley. There's a lot more interest in the Valley now for European tech. And so I'm super optimistic, actually, about Europe. But you're right. We're starting from a much, much smaller base.
So China, shouldn't we all just be focusing on China? I mean, the extraordinary, particularly in fintech, when I look at the WeChat Pay or Alipay, I look at the applications that they have. And I only do it because I have a 21-year-old who lost his wallet the other day, so the only way to get him money was WeChat Pay. But that was pretty amazing. So, shouldn't we all just give up and just let the Chinese win this one?
I think it's a big world. I think there's a lot of great innovation in China, and insurance, Zhong'an is by far the most interesting insurtech business over the last 10 years. At the same time, there are, 600 million people in Europe. Some of them are pretty smart, not me. And there's plenty of people to back. So someone needs to be there backing them. And you look at China right now, and you look at valuations, early stage in Chinese companies, and we worry sometimes about valuations here in Europe. I mean, valuations in China are a world apart. So yeah, the question will be in 10 years how that all works out.
How do you view China? Or these Chinese tech platforms?
I don't have a strong view on China. I mean, we're a global fund. We have a number of Chinese investments like ByteDance or Klook, which are extraordinary valuations at the moment. What I would say, though, is I think of this game that we're in, investing, either growth or VC, as a very local game. You need to have real staying power. And I actually worked in India for a number of years, and the reason I left was I didn't have any staying power. Because I think this industry, as an investor, you have to be able to build a network. You have to be able to be in the market for a long time. I think you mentioned earlier, ride the ups and downs of this. And I think being a visitor makes that very difficult. And so that's why I'm European. I'm in Europe. That's why I do it.
Why do we need venture capital at all? I mean, there's so much money out there. I've been pitched since I came to Paris with 3 different friends. I'm working on a startup, and they're trying to raise. I'm like, I know I'm not going to invest because I'll totally lose every bit of money. So I've answered my question. But no, really, why are you guys valuable? What do you bring to the table to all these entrepreneurs here?
Let's not talk about us specifically, but a good.
I mean, just you, Harry.
Okay, a good venture capitalist is able to allocate money to deserving projects, so that money goes to projects that will benefit the society and economy as a whole, and so that people have careers in companies that actually go up, and so that we don't waste our time and money and other resources on projects that won't go anywhere. So I think venture capital arguably is the most. That's what I like it. If it's done well, it's a real capital allocator to the most deserving people and most deserving projects, and that's a fun thing to do. If it's done right.
European governments doing that too.
And how successful have they been at it?
Yeah, not always so successful,
No,
but sometimes
but
successful.
in theory, that's the role of venture capital, and that's not an easy thing to do, especially in these very fragile early stage projects. So that's a long-winded way of saying is it's a real specialist job, and you've got to train for it, and not everybody can, with a bunch of money, can do it.
What about you? How do you justify your existence?
Well, we come in when typically you have angel and friends and family invested, no one else. And, it's not because I'm so much smarter than you, but you're not going to have the time to put in with that founder and like take his call on the weekends and really spend a lot of time with these guys. We go together with the founders through the crazy roller coaster of the first 24 months where everything can go, our products pivot, founders leave, cap tables are kaput, so everything, and so we go through that. We actually love that. We're maybe crazy, but we love that, and just finding the winning team, and I think we have a big influence. If we roll up the sleeves and help the founders, we actually have a major influence in helping those founders be successful, especially in early stage. So it's really, we just spend tremendous amounts of time with those guys, and so I think it makes sense.
I think there's something in the, you look at quote-unquote unicorns out of the UK, two of the biggest three, actually, V Interactive, Power Technologies, and Blippar, all of which have turned out not to be unicorns, none of which had VC investment. And I think there's something in that professional, hopefully, validation that the VC provides actually does matter. And it's nice to see some data supporting that.
Go for it.
Well, sure. Quickly, I think I don't think of TCV as a venture capital firm. I don't think these guys would either. We're kind of more the next stage, either like a late stage venture growth, and even we do some buyout stuff. And so, what we're trying to do is really, as I think I mentioned earlier, partner with category leaders as kind of the last capital that they need before an ultimate exit, whether that be an IPO or some other strategic exit.
By the way, to say something provocative, I think we need to distinguish between getting capital and getting someone on your board who will challenge you and will support you. I think those are two different things.
Yeah, very much.
Clearly we see entrepreneurs having a much easier time than ever before getting access to capital, and I think that might change quite a bit. But sort of this role that we play as a sounding board, that will never go away, I feel. Yeah.
How has that whole gigantic SoftBank vision fund changed what you guys do? I mean, it's $100 billion. Masayoshi Son says he's going to go back to Saudi Arabia and raise another one, and they're able to just kind of take these massive pieces. I mean, how is that disrupting? I imagine maybe not so much on your early stage, but maybe in the later stages, they're a big, giant sort of killer whale swimming in the seas, or I don't know.
I think that's fair enough. I think we see less so growth or VC guys, maybe, but I think entrepreneurs quite aware of them in the sense that if you are in the leading player in the doggy walking space and they put 500 million into the number two, that might change the market dynamics a little bit. So it's definitely a consideration, I think. Not suggesting that it means that the number two is going to win, or that, to use Harry's word, it's a good allocation of capital, but it definitely has changed the landscape. I think it's hard to deny that.
I think what it has introduced to venture capital is capital as a competitive weapon, right?
Yeah.
So they have they have weaponized capital, right? So they can make a company the winner. If you give a company so much money, then ultimately they can be the winner. And so they're the kingmaker in particular industries, which of course has really impacted the industry.
I would push back on that a little bit, not to make them the winner, but I think the bigger point, it scares away other guys from possibly even entering that industry or even trying.
Right.
Because if there's 500 million, like, what's the point of me starting something?
Okay, we're 5 dudes on stage. I got to ask the question. Silicon Valley has certainly been criticized for lack of diversity. What are you guys doing at each of your firms to create a more diverse, workforce, but also what are you doing with your investments? Is there a way that you are empowering various, or more diverse entrepreneurs anywhere that you're active?
So there's a group called Diversity.vc, which is trying to bring more diversity to the world of venture capital, which is well needed. We incubated them in our offices last year, and so a big supporter of that program. There is a lot more to be done. And then with our companies, it's hard because they are very different companies in very different places, ranging from 10 to thousands of people. It's hard to say what generalized approach we can put on them. I think there's a mindset towards diversity, which we need. But it's hard to think of a sort of peanut butter approach we can take across all of them.
Well, as of last year, so as of last December, we had a partnership in London with 4 partners. 2 of them are female. So, and it's a thing that grew very organically, where we weren't focused on having 50% female in the partnership, but it just happened naturally over time. Now we promoted 2 more partners this past December, so going from 50% female, we're now 1/3 female. But it's something that happened naturally, and that of course has worked really well for us.
We have 2 female partners, however, we do have 14 partners, so it's not a great ratio. We want to change it. It's hard to change. It will take some time. At Wirecard, we added 3 non-executive directors, all 3 women, and I can say that it has really improved the level of the discussion, the quality of the discussion. We need to do a lot more. In fintech, there's way too few founders that are female. I mean, yesterday there were quite a few actually here on stage, but it's not enough, and I think, yeah, we need to think more about how to change that. I don't think there's a ready-made answer for this.
What are you guys doing at TCB? How do you?
I think it's all very consistent. There needs to be more needs to be done in the industry. There's no question.
Yeah. Okay, 3 of you. You're in the UK. I gotta ask. So Brexit. I mean, I have no idea what's going to happen, but there is an increasing possibility that we will have a no deal Brexit. But whatever happens, whether it's no deal or a crummy deal or variations of which, how is that going to affect the way you operate or the way London continues to I think it has attracted more VC and more investments than any other place in Europe. Is that now imperiled now that French entrepreneurs can't just hop over the channel and live there and work there? And does this mean we're all going to have to move to Vienna? Or you're all going to have to move to Vienna? I live here.
So I think in terms of affecting what we do, it doesn't make much difference, touch wood, because most countries are positive on venture capital investing and want more venture capital investing. For some of our companies, it's very unhelpful, and it requires them to open European subsidiaries and open European offices, and it's adding significant costs at early stages of companies, which they would prefer not to have to do. And then I think there's a big trend here and a big focus from Ile-de-France to try to get more people to start their companies here instead of London. And it's still pretty early to sort of see what the data is on that, but time will tell.
Right. What are you here? Are you going to move to the Netherlands?
No, definitely not. I'll stay in London, and I think London will always be one of the key centers for venture capital. It's just frustrating that when things are so hard for entrepreneurs anyway, because you're trying to do new things, that the state and politicians just make our life harder.
And what's the pitch for Vienna? You have 40 seconds.
It's a great place to live. I have 4 kids, and there's actually a lot going on in tech. And you just hop in a plane and you're everywhere. So I really think there's a democratization of the valley, right? You can create that kind of dynamic in a lot of places. And London is probably going to remain the capital of the capital, I would say. But in terms of startups, you will find them in all kinds of different places. So, but it creates a hurdle for fintech. So those that are now in the UK and licensed in the UK and vice versa, it's a real hassle. It will cost a lot of money for them and time, and it's a shame that this has to happen. Yeah.
Good. Well, thank you guys. Thank you all. Give them a hand, please.